are recorded. Other people will join in. So if you want to take your lovely faces off the screen, you can. Mostly folks are just going to see the video and hear my voice disembodied in the background. From our slides, you can change your names, and Alexis will let people in. Because I generally can't see you all during when I'm running the slides on my screen, if you could put your questions in the chat, feel free to ask questions when we are going or when we are done. And Alexis will make sure I get those questions answered. So I'm going to share my screen and get started. Oops, nope. All right. We all see this. Yes, good. Perfect. All right. All right. So we're going to just do an overview of federal tax prep. So everyone in the room right now that I saw, I don't know who else might be coming in, are SIMBA members. So you definitely know who we are and what we do. But maybe you don't know the scope of everything we do. So we're a C3 nonprofit. Our focus is education, outreach, and advocacy for entrepreneurs, small businesses, and nonprofits in Eastern Washington. We just did an outreach plan for one of our upcoming contracts, and we get to go to a bunch of new cities and spend some time in some counties we haven't spent time in. So we're not quite to the Cascades yet, but we're almost there. We provide monthly free trainings just like this one. We do on-demand resource library of training videos. There'll be links in this workshop later. We have the Live Local directory marketplace that all of you are on. We offer low cost and free business consultations depending on the topic for all of you. And for folks who attend our workshops, you get a free training. I know you're all members, at least who I saw were all members, so you already have a set of free workshops. You also, free consultations. But you can gift those to a small business owner of your choice as well. So we'll send a follow-up email to folks after the session. If you're not a member and you've popped in, we will connect with you on how to redeem that free workshop as well. Or workshop. I keep saying workshop. It's the start of the year still, I feel like. Training. So we're just going to do highlights and getting you ready. So when you talk to someone like Rochelle, who's in the room, who's a bookkeeper and one of our members, that you are, no offense to the bookkeepers and accountants, saving a little of your money, that you're prepared, and that you're tracking things, especially as we're going into a new year. Maybe you didn't track them last year and it's going to be hard to recreate it, but we're at the start of 2026. We're running our business. We are going to make sure we are tracking things correctly and answer some questions that you probably already know about, because I always get folks who ask questions that they think are a dumb question, but the only dumb question is the question that's not asked. So we're going to kind of do a little overview, talk about self-employment taxes and what that means as business owners, and then go over some common deductions. It is not the exhaustive list of every deduction. All of you have really niche, different things that come up in your industry. We don't know all of them, but we're going to give you the ones that are most common and tracked, and we can provide you resources on how to find out about those ones that may just apply to you specifically. So just some record keeping requirements. The IRS requires all business owners to maintain all records of income and claimed expenses or deductions for 3 years from the date you filed that tax return, or 2 years from the date you paid the tax in full, whichever is later. Oftentimes you don't pay your tax until after you filed. People always talk about the 7-year rule. That's a kind of a combination of rules and an easy way to say you should do 7, but the IRS's requirement is 3 years from the date you filed that tax return. So if you filed your 2024 tax return and paid April 15th of 2025, you need to keep those records till April 15th of 2028. The clock does not start until that tax is paid or that tax return is filed, though. So if you haven't filed your taxes for 2024, it's not 3 years from 2024. It's 3 years from when you file or pay, whichever is later. So you can see how those timelines get longer. There are some exceptions to the rule, one of which is if you grossly underreport your income or you commit tax fraud, you have to keep those records forever. But I also don't think people who are committing tax fraud are keeping records anyway, so I find that to be a really funny rule. But there's some other exceptions, but this is general for everyone. And this is in line with the same kinds of requirements the state of Washington has for you as a business owner. What do you keep? All the income information you keep from the state of Washington. So all your sales of goods, products, and services, invoices, transaction statements, whether that is on your website or on your QuickBooks, your bank statements. You need to keep all those Washington state excise tax returns. Washington does store them for 5 years plus in your DOR file, but you should keep them. Receipts, invoices, purchase orders, every other payment you made for a business expense or something you're going to claim as a deduction. And when I say receipts, these are itemized receipts. So not the credit card one where you sign off that says nothing. Because if you're audited, and I will say the risk is pretty low, it's not zero. Obviously, the IRS has had a lot of staffing cuts, so it's getting less, but they always look at your receipts if you're audited. And if you have just a receipt that you signed off that says, Costco, $35, and you sign and it's got your 4 digits of your credit card, that's not going to count. That's going to be removed from your deductions, and you're going to start accruing taxes. 1099s issued to contractors or vendors. Rochelle put a note in the chat, which I will talk about at the end as a bonus slide. Any 1099s you also received. Your mileage records. Mileage is the first thing in an audit that gets looked at for small business owners. You have to have a mileage log. Cannot be for your commute. I'm going to talk about that a little bit later. It can be in a notebook. You can use an app. You can use a spreadsheet. You just have to have an actual mileage log. Any leases, your commercial lease, if you have an office space, if you have a dedicated home office, you should have a lease for that too and be paying yourself on that lease. For the home office lease, it is important that you have a dedicated home office space. So not just you throw a laptop in your guest room whenever you want to do some work or you work on your coffee table. Technically to take that home office lease credit, you have to have a dedicated space that is just your home office. Does that mean it's just your home office and perhaps your Christmas ornaments are stored in your closet? That's fine. But if it's got another purpose, that's also something to look at. And then business loan and business credit card interest statements, because those are potential deductions for your business, not your personal ones, unfortunately. Other things to keep. If you had financial statements prepared by a bookkeeper or an accountant, you need to keep those. Keep your records in fiscal year order. Most of you are probably on a calendar year. A lot of folks in government contracting or corporations or people who are corporations are going to keep them. Maybe their calendar year is like the state of Washington is July through June. So they're on a fiscal year. Whatever method you're using, keep your records in that order. So if you're a calendar year, keep all your 2024 records together. Keep your records electronically and in a way that you can easily access and find them and back them up. And if I don't say it a few more times, back them up, have a way to back them up. It's really important because so many of our receipts now are on that photostatic or photosensitive paper, like when you go to the gas station. And if it gets any light exposure, the receipt melts, the ink disappears. It's like those disappearing ink markers that we had in the 90s as kids. So it's really important that you have copies of those. The IRS and the state of Washington don't require you to have physical copies. If you have employees, there's a ton of other records that apply that you have to keep. Talk to us about that separately. So let's talk about self-employment tax and the forms you're going to use. So if you're a sole proprietor, you have a DBA or multiple DBAs. I know some of you in this space have lots of them. You're going to file your federal taxes on your individual tax form. It's your 1040. The same is true for an LLC if it's solely owned or if you own it with your spouse, because it's a pass-through entity, unless you've made an S-Corp election, which you would know about. But otherwise, it's going to be on the form 1040. And one thing that we see a lot, and we hear from accountants as well, is that a lot of folks have a day job and a side gig. I know some of you in the room do. And people will get their W-2 right away and they'll file that tax return. And then they're like, where's my business tax return? If you're a sole proprietor DBA or you're that pass-through LLC, you file it on the same tax return. So you have to amend your tax return that you already filed, which will delay refunds, change payments, could delay things if you needed to give tax returns to a lender, can just create some stress for your business. So know it's all on the same tax return. All of your income as a business owner is going to be there. So whether you have a day job, a couple of businesses, whatever that looks like, same tax return. So because it's an individual tax return, it's due by April 15th for the year prior. You can file an extension as long as you file it before April 15th. It's free to file the extension. Technically, you have to pay your taxes if they're due when you file the extension. If you don't, you get some interest and penalties. It's not terribly high depending on how much you owe. But know that if you file your 1040 right away with your W-2 income, and then you're like, oh, I need to do my taxes for my small business, you're going to have to amend that. Amendments are one way to trigger audits. When I was in college, I learned about deduction for tuition payments. And so I amended some old tax returns, and I was working like at a fast food restaurant, so I wasn't making any money, and I got audited. And I truly made like maybe $2,000 that year, but I had to go through an audit. And I think it's because I amended the tax return, because truly nothing else that I was reporting on was very exciting. If you are an LLC owned by multiple people who are not married to each other, so more than two people, or no relation, or you're an S Corp, a corporation, any other kind of structure, you do have to file a separate business tax return and then report that income on your individual tax return. So you should file those first and then file your individual tax returns. So just be aware, if you do have that structure and your partner is not married to you, or you've got your friends working with you, or your corporation, you've got some other considerations. So as someone who is self-employed, whether you have a day job in addition to your side job, or it's just your own business, your self-employment tax rate applies to all your income you earn running a business. So the tax rate, which you don't need to know, it will be calculated for you by your accountant, by QuickBooks, by Free Tax USA, by whatever software you're using, unless you're literally using the paper forms, but the formula is on the tax form if you download it. Your tax rate's currently 15.3% of 92.35% of your net business income. So that's how you're taxed. So for example, if you get all of your income, subtract all your deductible expenses, and that number is $20,000, you're going to pay $2,825.91 in federal taxes. If you are only running self-employment, you probably should have been making your quarterly tax payments, which I'm not going to talk about here, in advance. You can get penalties. They're not huge, but you can get them for not making those advance payments, because the IRS wants to get their money ongoing, just as they would if you were a W-2 employee. But that's kind of an example of the math of what that would look like. So again, most folks are using an accountant or some software. You know, us, we at SIMBA love to support independent locals. So if you're looking for folks to help you with your taxes locally who are not H&R Block, we are happy to give you a list of folks that we would love to send to you. So to get ready, whether you're doing them yourselves or doing them with a tax professional, and definitely get ready if you're doing them with a tax professional, because you don't want to pay an accountant at their high hourly rate to sort through your receipts for you. But you need the total amount of income you earned in your business for the tax year, and quite frankly, all of your income earned, whether it's business or employment. Ideally by payment type, in part because you're going to get a different form for payments you accepted by credit card or on Venmo or fill in the blank. So usually it's kind of credit card and cash or check. Venmo is going to send you a 1099 if you take payments that way. Squarespace will send you a 1099 for payments received that way. The credit card statement is a 1099-K. So if you have a payment processing system, you'll get that document as well. And then cash and check. So those total amounts of income. You want totals of your allowable deductible business expenses by category. So you don't need to list every time you went to the post office to get stamps and you spent, $6 this week, $13 next week. You need to know that your budget for postage for the year for your business was $150. You need to have the backup data, but you're not going to be putting in those itemized lines. Depreciation amounts, if applicable, for large or expensive equipment or business assets. So really common in places like construction, where you're purchasing a very large asset and you're not taking the deduction for that all at once, versus buying, like I'm talking to you on a Chromebook right now that I think cost SIMBA $250. We don't depreciate because we're a nonprofit, but if we were an LLC, I wouldn't treat it as a depreciable asset, because quite frankly, as soon as I took it out of the box, it wasn't worth anything. That would just be an equipment purchase. But larger assets, depreciation, those are the things you're going to want to talk to an accountant about, and they'll do it in a way that makes sense for you. Actual mileage for business mileage, when a personal vehicle is used for your business, you can deduct that. It has to be mileage outside of your regular commute. So if you, I'm at our office right now, if you drive from your house to your office space, that is not deductible mileage. That is a commute, just like it is to go to work. But if you travel, I know some of you in the space, if you travel to vendor events to sell your stuff, that's work travel. If you're going to the post office to ship things as part of your work, that is work travel. If you're having client meetings, you're taking education courses, that's going to be work travel, just not your commute. You can also deduct vehicle expenses on a personal vehicle if you use that vehicle more than 50% of the time for your business. There's all kinds of tricky rules around if you're more than 50% one year and not the other. You need to talk to an accountant for that. But if you use your personal vehicle more than 50% for your business, and again, you have to have that mileage log, you can also deduct things like gas and repairs, licensing, those kinds of things. If you don't use it more than 50%, you can still track that business mileage. And obviously, if you have a business-owned vehicle that is in the name of your business, those expenses can be tracked no matter how much you use it. So common business tax deductions. Today is a short session, but I usually throw in that video from Schitt's Creek where they're talking about write-offs and deductions, and he's buying like skincare and fancy bedding, and the father is telling him that you can't write this off, and who's writing this off, and you're paying for it. So I do think it's funny and it's true. And I definitely have people saying that's a write-off. I've been seeing a lot of videos on social media recently with influencers saying all the things they get to write off, and most of it is wrong. Please do not take your business advice from a social media influencer. I don't think anyone in the room right now needs to hear that, but I definitely think it's something that just a good common practice. And I wish I wasn't laughing when I say it, but I think one of the common things that we hear at SIMBA is folks saying things like, oh, my buddy said this, my buddy said that. And I'm always like, well, does your buddy have a successful business? Are they an accountant, a consultant, a lawyer? It's never any of those things. So don't listen to your buddy. So I'm just going to cover some common ones and some things that fit within those categories. And what they are. So business tax deductions are business expenses that are going to lower the amount you pay in taxes. You've already paid for these things. I remember years ago, I ran a business and I had to buy a new laptop. And my employee said, oh, well, you can just write that off. I'm like, well, yeah, I still have to spend $800 to buy this laptop, though. So it's not like it's magic money. It just means it's going to lower the amount you're taxed on. We looked at that number before. And so let's say you earned $40,000 in your small business this year and you had $20,000 in business expenses. You're only taxed on that net income, that $20,000. I know it should be clear, but it's not always, it's not for your personal expenses. Your daily Starbucks run, not Starbucks run, we support independent and local. Your daily Indaba run is not a business tax deduction. One of the things the influencer was saying was paying for all these new clothes, and there's some really limited exceptions for uniform and clothing. So make sure they're real expenses, not your everyday expenses. So common ones, advertising and marketing. That includes your website and your domain purchase, print ads, Google and Meta ads, flyers, business cards, anything you're using to promote your business. Stickers, that's a really common one now. And not if you're selling stickers. I saw one of you sneak in the room. But if you are handing out stickers to promote your business, I know all of you have received some SIMBA stickers at some point. Legal and professional services, lawyers, accountants, bookkeepers. If you hired SIMBA for a consultation, that $25 consultation fee is a write-off under that category. If you hired an architect to do a building versus a contractor doing the construction, those are all things that you can write off. And again, it's in the year you paid them. Office supplies and equipment. So paper, pen, tape, envelopes, chairs, desks, computers, tablets. Mostly chairs, desks, computers, and tablets are going to fit in that office supply and equipment, not that depreciable asset, unless you're buying like a Herman Miller desk and chair set that's going to run you, $10,000. You're probably just going to treat it as an equipment purchase. Cleaning supplies. I got asked that question the other day. The things you need to keep your office clean absolutely are office supplies and equipment. And then industry specific equipment. So Monday we worked with a set of hairdressers. So they have blow dryers and scissors and combs. Maybe your equipment includes you're a baker, so you have like muffin tins and springform pans and those kinds of things. So you're going to have industry specific equipment depending on what you're doing. A lot of you are mostly using software based businesses. So your Google email, if you have professional email, or Outlook, fill in the blank, QuickBooks, FreshBooks, Xero, any kind of software for accounting, Canva, if you have a social media, Canva for social media, any invoicing software, QuickBooks and FreshBooks can do that, but some people use different ones. Zoom, Adobe, client booking software, any kinds of software you're using for your business are things that you can deduct. Shipping and postage expenses, if you have to pay for packaging materials and postage to ship out your products. The cost of goods. So the cost of goods are things that are used to create something to sell. So an example I use is catering. We did a workshop for some caterers, and they are buying all these ingredients to then sell a final product. So they're buying flour. They're not selling flour. So they're not doing a wholesale to retail transaction. They are buying flour to make crepes or crepes, however you want to pronounce that. And so that's going to be part of your cost of goods. It's things you're using to create something else. Versus something like the hairstylist, a lot of them purchase retail products to sell, like hairspray, but they're not making a custom hairspray. They're just buying that product and then selling it. So it could fit into cost of goods as well. You can track it however you'd like. Retail sale products. Contractors, non-employee workers, someone you've hired to run your social media, someone to update your website, folks who are coming to run an event. I will note Washington is very strict about employee versus non-employee. So just because you treat someone as a contractor doesn't mean they are. But if their business is outside the scope of your business and they're running their own business, that's another deduction. Taxes and license you already paid. So your business license, your specialty licensure. So if you are a caterer and you have a specific license, if you need a license for construction, that would count. And any state sales tax and B&O taxes paid. Rent and occupancy costs, so your office lease, your home office if you have a dedicated office. Another thing that would fit under there is if you're someone who goes to vendor events like farmers markets, you have to pay that vendor fee. That would fit under a rent or occupancy cost as well. So you get to deduct those. Travel cost, again, business travel, not your commute. Airfare, cabs, trains, mileage, hotels, travel meals. I know that travel meals are a 50% deduction. You still are going to put in the total amount, the software and or your handwriting paper form. I just don't know anyone who does paper tax forms anymore is going to do the calculation for you. I think the IRS's standpoint is you have to eat anyway while you're traveling, so we'll let you take 50%. Parking, your business insurance, liability, property, health, kind of fill in the blank that you're buying for your business. Retirement plan contributions, especially if you have like a SEP, simplified employee plan, you're making those contributions. And for the contributions you make to employees, your phone and internet, which could also be your personal phone and internet. You're just supposed to allocate the amount of time you spend using your phone and internet for business versus personal. Interest paid on loans or credit cards, business loans and credit cards. And it has to be interest paid. So you have to be accruing interest and paying towards it. Your vehicle insurance, if your business owns the vehicle or you're using the vehicle more than 50% for a business. And continuing ed courses. I know some of you in the room have those to keep your license for the kinds of things you do, or you're just taking them to be better at your job. So continuing ed courses are also something that you can deduct. And then thank you, Rochelle, for raising this. And I literally slipped this slide in at the end here. If you are a business owner and you paid any non-employees or vendors, including a landlord, via cash or check, for more than $600 in the year, you need to issue them a 1099. If you paid them via Venmo or credit card, those 1099s are generally issued by the payment processor or Venmo themselves, but you need to double check that because otherwise you're responsible for doing that. If you're running a QuickBooks or FreshBooks or Xero or any other software system, there's an option for folks who pay to track them for 1099s. You do have to issue 1099s to your landlord as well if you have a commercial landlord for those payments. Um, Really important, they have to be filed and submitted to the IRS by January 31st, 2026. So you don't get to wait. And if you, the new IRS rule, I think it came into play last year, Rochelle, I might be wrong about that, but at least in the last couple of years, it changed that if you have to file 10 or more 1099s, you have to file them electronically. So if you're running a QuickBooks or another software, you can pay them to file electronically. There's some other options to file electronically through the IRS. If you're filing less than 10, you can do it on paper forms. You can buy a set of paper forms at Staples. You can order paper forms from the IRS. That January 31st deadline is strict. If you file them late, you, as the person who's supposed to issue them, can get penalized. And the fines get kind of high. So make sure you're doing that. One way that we make sure we're able to issue our 1099s, because we send them for things like grant disbursements or any contractors we hire, our landlord, is before we issue them the first payment for something, we make them complete a W-9, because you'll need the W-9 to have their tax information to be able to complete that 1099. So I always make it a requirement before I pay you that you have to give me that W-9. SIMBA's resources, link to our video library. Again, we're going to share these slides with you. Business consultations and memberships. A lot of you are members in this space, and everyone attending today gets a free consultation to use for themselves, or if you want to give it to somebody else, you can do that too. Mark Pond and Startup Spokane have some incredible resources available for the cost of a library card. There's a link to our workshops and events. We have a lot of things that we're planning and finalizing coming down the pipe for some other kinds of things. I will highlight, we are going to have our first ever annual fundraiser event, the SIMBA Circus, on May 16th, 2026. It's not going to be a sad paddle raise. It's going to be a bit of a Cirque du Soleil event. So put that on your calendar. And then we are sponsored by Spocast. We're also now sponsored by Electric Photoland, which is super cool. And this video and this training is able to be shared with you for free because we are part of Washington State Department of Commerce Small Business Resiliency Network. You all know how to find us. Everyone in the room right now has worked with us already, but if you don't know or want to send someone to us, there is an intake form on our website. And if you happen to be in Kisuri with the beautiful Jillian in this photo, our office is right next door. So you can find us. That was a lot. I'm going to stop sharing. Questions from anyone or comments? No. Yes, Rochelle, please.
Thanks. I just wanted to make sure people are aware too. The IRS is also really trying to push people to create their individual irs.gov login.
Yes.
And you need to have your identity theft PIN this year to be included, or your tax return will be rejected. And the e-file systems will reject those returns if you don't have it until you download and get it from the system. And ID Me is what they're using to do it. So just making sure people go early, get that now, and you can link your business to your account so you can get that, because on the business side, you need that control number that's on your EIN letter. So that also needs to be something to make sure to include.
That is a great tip. And for the ID Me, they are going to make you put your face next to your ID. So I definitely, the first time I did it, they're like, I was looking a little rough, I guess. So make sure to place with good lighting, and maybe you've brushed your hair, because they're analyzing your facial structure and not your hair. But I just was like, oh, they're like, this isn't you. I'm like, no, it's me. So it's id.me. You can also go to irs.gov and get that link. Angela, that was your question. And importantly, thank you for mentioning the EIN letter. I always forget that. I always tell people when you're applying for that EIN, please save that letter, please save that letter, please save that letter, because there's no way to look up the EIN, the business identification number, or the tax identification number for your business. There's no way to be like, oh, I forgot this number. There's two ways to get it if you forgot. I know from personal experience 15 years ago, you either call the IRS and you wait on hold for, now could be days before you talk to someone. Um, but you can either wait on hold and get it, and they're very kind, or you write them a letter and it gets sent to them, and then you wait maybe 6 weeks for them to send you a letter back with that EIN. So if there's anything to save um, and memorize, it's that number. If you've already filed a tax return from a prior year, it's going to be on there. So that's great. But definitely make sure you have that number saved. Oh gosh, Angela, I believe you about trying to call them. Yes, Rochelle, take it away.
I'm sorry, I just want to add to this
Please.
year, the IRS is moving forward with making sure the proper EIN is on any 1099 sent out. So really making sure you've gotten the W-9 from any vendors and contractors, because you sending it to them, if the wrong number is on that document, you could be fined for sending an incorrect 1099. You
Yeah,
could
last year we
receive
had,
one that's incorrect, but it's sending it to
yep,
someone else. And a lot of people have been updating their EINs. Maybe they had social security number before and now they have an EIN, just making sure you have that documented for whoever's doing your taxes, that they
yep.
can show that movement from the old number to your new number and it's properly accounted for.
And we are just in a practice. We have certain vendors we use every year. We just make them verify their W-9 every year as well as a good practice. So that way, in case it changes or in case there's a typo somewhere and no one has caught it yet, that's also a really good tip. Rochelle is a bookkeeper and a mobile notary and a SIMBA member. We never get to see her at events, but we're always delighted to see her online. She gave away the hockey tickets at our holiday party for you folks that were there. So uh, she also is a great resource. We've got another list of folks, but that's, if anyone, no one else has any questions, we'll get this posted. We'll share the slides. Like I said, we can get you prepped and talk to you about these kinds of things, even talk to you about how to organize your QuickBooks a little bit and get you ready so you can go talk to someone like Rochelle or one of our accountants and be a little more understandable. But we do not touch federal tax filings for very obvious reasons, but we can do support on your state tax filings for your small businesses as well. Thank you so much, everyone, for spending your lunchtime with me, and we'll see you all soon. Bye.